Given all this information about this firm duplicated in this little table, we need first operating cash flow. There are two ways we can calculate operating cash flow. I'm just copying formats here. Let's call it OCF number 1. We need to find earnings before depreciation and interest expense, which is sales minus cost minus other expense minus the taxes themselves. Alternatively, the second way, and let's copy and paste the format. We calculate net income first, then we add back depreciation and interest expense. Our net income is sales minus costs minus other expense minus depreciation minus interest expense minus taxes. We add back depreciation and interest expense. Of course, in this problem, we knew the tax amount directly, so it's it's better to do it the first way. But had we not known the tax amount, we would have had to calculate earnings before taxes, then calculate the taxes, and go that way. In that scenario, OCF number 2 is actually a better way of doing things. Now, so operating cash flow is that one. Cash flow to creditors, by definition, is interest expense minus net new borrowing. Well, interest expense is right here. We have long-term debt redeemed, so that is negative borrowing, which means that is actually a cash flow to creditors. Creditors got on net 12,900, 8,900 as interest expense, and 4,000 where we redeemed the existing debt. Cash flow to stockholders, it's simple. To dividends, we deduct net new equity issued, 2,900. The reason we deduct, when we issue new equity, we are getting cash from stockholders, which means it is a negative cash flow to stockholders. Now, in order to calculate the net working capital, we need to be a little bit creative. If you remember, there are two ways. Let me copy the format of these. Two ways we can calculate cash flow from assets. The first one is the simple one. Total cash flow from assets has to go either to stockholders or the creditors. So it's cash flow to creditors plus cash flow to stockholders. The second way is operating cash flow minus, let's do these here. Net capital spending and change in net working capital. I'm being a little bit fancy here. Okay. Cash flow from assets is operating cash flow minus net capital spending minus change in net working capital. So let's calculate net capital spending first. That would be, in this case, change in net fixed assets, but we add back depreciation. And for now, let's put a 0 number for net working capital, change in net working capital. So OCF plus or minus net capital spending minus net working capital is cash flow from assets. But these two need to be the same. So let's calculate the difference. We're going to have to find the net working capital amount that's going to make these two alternative ways of calculating cash flow from assets the same. So under the data tab, goal seek, we're going to make that 0 by changing net working capital change. So $470.